Now let's get back to what this means for your stocks. We've been in a terrible bear market with the exception of some drug stocks, the utilities, and the oils. And this has been going on since November. That's because almost every company out there has to pay too much for everything. So their gross margins, which is the holy grail of Wall Street, how much they make after the cost of goods sold, have really been hurt. Companies that had high growth but weren't making money have seen their stocks cut to pieces. If your business wasn't turning a profit and then returning some of that profit to shareholders, well, your stock sank like a stone, and many people who had those stocks have left the building. All of this is happening because Wall Street expects the Fed to do its job and break the spiral of ever higher prices, some of which indeed had something to do with the Fed creating too much money and allowing rates to stay too low. Okay, nobody's perfect. They can't wave a magic wand and make all inflation disappear, but they can cool down the economy and help us get closer to price stability. That's very important. Persistent inflation is bad for business, and for what's bad for business is ultimately very bad for the economy and bad for you. In short, Powell did what he had to do. So why do we play this parlor game that's obsessed with every word out of the Fed? And they have that, giant Hollywood Squares game they play with him. Hey, Jay, cut it out already. You don't have to do that. You're taking some of these questions like, oh, Mr. Fed Chairman, what'd you say? All right, enough. You see, there are so many investors who are laser focused on whether the Fed's too late in trying to stop inflation. The curve. They're worried Powell might need to be tougher and possibly cause a recession to get the situation under control. I think it's very important if you're trading bonds, but most of you aren't. It's very important if you're borrowing money to buy stocks. That's not something you should be doing in the first place. And after today, it's even dumber than it was. But you don't need to parse every single word from the Fed if you're buying stocks of good companies that are built to last, because these are the same companies that are suffering from the ever higher raw costs. Powell is tightening in order to help them as well as you.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.